Hello everyone, welcome to EduTap and welcome to today's session. So in the Finance 360-degree session, we are going to discuss two very important finance current affairs. The first one is regarding the RBI issued the operational framework for the reclassification of FPI to FDI. So there is the operational framework that has been released for the reclassification of FPI to FDI. Okay. So the second news article is regarding the GenWise UPI. So GenWise launches the UPI payments for senior citizens with secure interface. So what is this news article all about? So that we are going to discuss. So both the news articles are very important. The first one is the RBI notification. So you can understand that how important it is going to be. Okay. So we are going to discuss the reclassification of FPI to FDI. So good morning everyone. Welcome to the session. Good morning, Sarish. Good morning, everyone. Welcome to the session. So let's start with the session. Do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and join our Telegram channel, because in the Telegram channel you will get the PDF of the session. So today we are going to discuss the two news articles. The first one is the RBI has issued the operational framework for reclassification of FPI to FDI. Okay. So good morning, everyone, and let's start with this topic. So good morning, Aditya. So now see, the Reserve Bank of India has issued the operational framework for the reclassification of the FPI, the foreign portfolio investment, to the foreign direct investment. So what is the foreign portfolio investment? When the investment is happening in the bonds, in the securities, in the shares, in the derivatives and such. So when the investment is happening in the securities with the sole motive of earning the profits. While the FDI is the foreign direct investment, where the foreign banks or the foreign institutions, they are establishing their subsidiaries or they are establishing their branches in our country. Like the Standard Chartered Bank has a branch in our country. So when the foreign companies are establishing their subsidiaries or their branches in our country, so that is FDI. As well as, see, there is one more criteria, that if the investment is made by the foreign portfolio investors along with this investor group, shall be less than 10% of the total paid up equity capital on the fully diluted basis. So if the foreign portfolio investors, they are buying the shares of a company, if a foreign portfolio investor with its investor group is buying the share of a particular company of India, that is XYZ, so the shares that is held by the foreign portfolio investor should be less than 10%, then only it will come under the category of FPI. So I hope you are getting the point, that is investment made by the FPI along with its investor group. So the FPI along with its investor group should have less than 10% of the shares in a particular company. If the foreign investor has more than 10% of the shares in a particular company, then that shares will come under the FDI. Then the shares will come under the foreign direct investment, because if you are holding more than 10% of the shares in a particular company, that means you are having some controlling interest in that company. So let's say that this entity, that is foreign institution, is having more than 10% of the shares, 10% or more than 10% of the shares in a particular company, that is XYZ. So that means this foreign institution have controlling interest, have decision making interest in the company, and that's why this investment in the shares will be considered under FDI. I hope it is clear, right? I hope this is clear. So the investment made by foreign portfolio investor along with its investor group, if it is less than 10% in the shares, then it will be considered FPI only, then it will be considered portfolio investment only. But if it is 10% or more than 10%, then it will come under the FDI category. So further, the FPI investing in breach of the prescribed limit shall have the option of divesting their holding. So let's say that you were having less than 10% of the shares of the XYZ. So you were having only 8% or 9% of the shares of the XYZ company. But now you or your investor group has increased your shareholding in the XYZ company, and now you have more than 10% of the shares in the XYZ company. Okay, so that means now this investment cannot be considered under the portfolio investment. Now this investment, that is more than 10% of the shares that you or your investor group has bought, so this shares shall come under the FDI category. So there is an option that is given to you that if you want to remain in the portfolio category, so you can divest your holding, that means you can decrease your holding. So if you have got more than 10%, you can decrease your holding to less than 10%, or you can convert your FPI investment into the FDI investment. Okay, so if you are doing the foreign portfolio investment and that investment, the portfolio investment is in breach of the 10% limit, so then you have the option of either decreasing your holdings to the prescribed limit or reclassifying your holding as FDI rather than FPI. So in this regard, the operational framework has been provided that if you want to decrease your holding, that is easy. If you want to decrease your holding, that is easy. But if you want to convert your FPI into the FDI, then there is the operational framework that is provided. Okay. So what is that operational framework that we have to understand? So first of all, any FPI investing in breach of the prescribed limit, that is of less than 10%, shall have the option of divesting, of disinvesting their holding, decreasing their holding, or reclassifying such holding as FDI subject to the conditions specified by RBI and SEBI within 5 trading days from the date of settlement of the trades causing the breach. So let's say that today you had 8% of the shares of the XYZ company, and today you have bought 2 to 3% more shares of the XYZ company. That means on 3rd December, you have breached the limit and you have got more than 10% of the shares in the XYZ company. So that means on 3rd December, you have breached the limit, and from the day of breaching the limit, now you have 5 trading days from the date of settlement of the trade causing the breach. From this day, now you have 5 trading days to either divest your holding or to initiate the process of converting your FPI into FDI. Okay, so you will have 5 days to either decrease your holding or to initiate the process of converting the FPI into the FDI. So this is the idea. Now, in case the FPI intends to reclassify its foreign portfolio investment into the FDI, there is the framework that is provided. So that we are going to discuss. So first of all, the facility of reclassification shall not be permitted in any sector that is prohibited for FDI. So there are certain sectors in our country that are prohibited for FDI. So in those sectors like real estate sector or chit funds and such, so in those sectors FDI is not allowed. So the facility for reclassification will not be permitted. You will have to compulsorily decrease your holding, because you cannot convert your FPI into FDI because that is not allowed. FDI is not allowed in certain sectors. The FPI concerned shall obtain the following approvals. Now in the sectors where the FDI is actually allowed, so in those sectors the approvals or agreements have to be taken. The approvals, necessary approvals have to be taken from the government as applicable, including the approvals required in case of investment from land bordering countries also. So there are the approvals or the necessary approvals or consent has to be taken, as well as the concurrence or the agreement of the Indian investee company. Let's say you are investing in the XYZ. So the agreement has to be taken or the approval has to be taken in a way. The agreement has to be taken from this company also that okay, this foreign investor wants to do the foreign direct investment in your company. Okay, so agreement of the Indian investee company concerned for reclassification of the investment to FDI to enable such company to ensure compliance with the conditions pertaining to sectors prohibited for FDI, sectoral caps and such. Okay, so the XYZ company should also be agreeing or should also be in the loop that okay, this foreign investor is doing the foreign direct investment in my company. So the company should also be in loop. So there is the approvals that has to be taken from the government, as well as there is the agreement that should happen with the Indian investee company. Okay, So that is the idea. Now the next is that the FPI shall clearly articulate its intent that why it want to reclassify the existing foreign portfolio investment in the FDI, into FDI, okay, that it wants to have the operational holding, it wants to have the decision making power, it wants to have the operation, like it wants to be in the management or something. So the FPI should clearly articulate or clearly define its intent of reclassifying its foreign portfolio investment to foreign direct investment, and shall provide the copy of the necessary approvals and agreement to its custodian. Now custodian, we have discussed this term in the previous lectures also, but for the new students, custodian is actually, it can be any bank in India, it can be any bank in India. So custodians are compulsory for the portfolio investors and for the mutual funds. So the mutual funds in our country as well as the foreign portfolio investors in our country, they need to compulsorily have custodian, because custodians are the ones that hold the, like they keep the securities in the safeguarded form, okay. So custodian are usually the banks in our country. Axis Bank and different banks are also providing the custodian service, okay. So a financial institution that holds the customer securities. So custodian is a financial institution that holds the securities of the foreign portfolio investors and for the mutual funds for safekeeping of the securities, so that the securities are kept in a safeguarded manner, because these foreign portfolio investors and mutual funds, they are trading a lot in the securities and daily there is the transaction that can happen. So for safeguarding the securities, for keeping track of the securities, the custodians are compulsory for the portfolio investors and mutual funds, okay. So custodians are the financial institutions that hold the customer securities for safekeeping to prevent them from being stolen or lost, and for keeping track of the securities also, okay. So the foreign portfolio investors shall provide the copy of the necessary approvals and agreements to his custodian, pursuant to which the custodian shall freeze the purchase transactions by such FPI in equity instruments of such Indian company. That means the shares that the FPI has bought of the XYZ will be freezed for the time being till the process is taking place, till the completion of the reclassification. The shares will be freezed in the account of the FPI, okay. So if the foreign portfolio investor wants to convert its investment into the foreign direct investment, so after getting the approval and such, the shares will be freezed in the account of the portfolio investor, so that till it get converted into the FDI, there is the freeze of the shares that is happening, provided that if the necessary approvals are not taken by the FPI, it will have to compulsorily divest its investment. If the foreign portfolio investor has not got the approvals, it will have to divest its holding, okay. So that is the idea. Next point is that for reclassification, the entire investment held by such FPI shall be reported within the timelines. So there should be reporting that should happen of the complete shares that is held by the foreign portfolio investor, and this reporting should be as per the Foreign Exchange Management Mode of Payment and Reporting of Non-Debt Instruments Regulation 2019. So as per these regulations, the reporting should happen. So there are different timelines that are provided in this regulations, okay. Post completion of reporting, so after the reporting, the FPI shall approach its custodian with a request for transferring the shares, the equity instrument of the XYZ company from its demat account, that is for the foreign portfolio investment. So the foreign portfolio investor will want to convert or will ask its custodian to convert or to send the shares of XYZ from its portfolio account to the demat account of the foreign direct investment, okay. So this is the idea, that post completion of reporting, once the approvals has been taken, so once the approvals has been taken, the freeze of the securities will happen, the securities will be freezed, and after securities are being freezed, then the reporting will happen that okay, this much is the total freezed amount of the shares of this XYZ company that this foreign portfolio investor has, and after the shares are being reported, after the freezed shares are being reported as per the regulations, then after the reporting, the FPI will approach its custodian that now you can convert because I have got the approval, because I have done the reporting. So now you can transfer the shares that are freezed in the portfolio account. You can transfer the shares of the XYZ company to the FDI demat account. So that is the whole idea, that post completion of reporting, the FDI shall approach its custodian with the request for transferring the shares equity instrument of the Indian company of the XYZ from its demat account for maintaining foreign portfolio investment to its demat account maintaining the holding of FDI. Okay, so the shares will be transferred from the FPI account to FDI account. So after ensuring that the reporting for reclassification is complete in all aspects, the custodian shall unfreeze. So custodian will see that okay, actually the reporting has happened or not. So after seeing that actually the reporting has happened, so now the custodian will unfreeze the shares and will process the request and will transfer the shares from the FPI account to the FDI demat account. Okay, so the date of investment causing breach in such cases shall be considered as the date of reclassification. So whatever is the date of investment where your shares have been increased more than 10%, so that date of investment shall also be considered as the date for reclassification. Thereafter, the entire investment of FPI in the Indian company shall be considered as FDI because the shares have been transferred from the FPI account to the FDI demat account. So now all the shares are under the demat account of the FDI. So the entire investment of the FPI in the XYZ company shall be considered as FDI now and shall continue to be treated as FDI even if the investment is falling below 10% subsequently. So once the shares has been transferred to the demat account of FDI, now if the holding is decreasing but it will still remain in the demat account of FDI, it will still be considered as the FDI even if the holding is going below 10%. So once there is the reclassification to FDI, after that, even if the holding is falling below 10%, it will continue to be considered as the FDI only. Any confusion? So this is the end now, that the foreign portfolio investor along with its investor group shall be treated as a single person for the purpose of reclassification of foreign portfolio investment to the foreign direct investment. So this is it. Any confusion anyone has? Any confusion anyone has? Ma'am, these things happen on which platform? Grow Zerodha. See, it is for the foreign portfolio investors, okay, not for us. So they have different interface than us, okay. And it can happen like the demat accounts are held by the NSDL or CDSL. So they are the ones that are the depositories that are connected with the demat account, okay. So we can trade, like we can buy the shares through any Grow, Zerodha. You can buy the shares of different Indian companies, right? But your shares are held in the demat form with the NSDL or CDSL, okay? So you are buying the shares through Grow, Zerodha, but your shares are held in the demat form with the NSDL or CDSL, okay? So the foreign portfolio investors have some they have some different kind of approvals that they have to take. Now it is a very small news article but very important because a new thing has come into the platform of UPI. So GenWise, that is a company that is focusing on the senior citizens. So GenWise has launched the UPI payments for senior citizens with secure interface. So GenWise has announced the launch of UPI payments on its app for senior citizens. So here you can see that a very easy interface has been provided for the senior citizens, okay. So pay on QR code, send money to someone, extra security and limits, free insurance protection. So there is more security, more convenience that is provided through this GenWise UPI, that is particularly for the senior citizens because they are the ones that are very much afraid or that are very much not feeling secured when they use the online platforms, because they feel that the frauds can happen to them. So for them, there is the GenWise UPI that has been launched. So GenWise has launched the UPI payments on its app for senior citizens. This is the industry's first ever introduction of UPI for elders, offering a simple user interface. Very simple user interface has been kept so that the senior citizens do not get confused, as well as there is enhanced security and cyber fraud awareness that is also provided in this GenWise UPI. So GenWise UPI has been developed in collaboration with Axis Bank, which is acting as the sponsored bank for facilitating transactions. So if you know that there is Amazon Pay, Flipkart UPI, Bharat Pay, so all of these different applications we use, especially Bharat Pay, Google Pay, we use these applications, right? Now with this Bharat Pay, there is also GenWise UPI that has been launched. So all these different applications for the UPI payments, they have some payment service provider banks, such as Amazon Pay has Yes Bank and RBI Bank, Axis Bank. Flipkart UPI has Axis Bank. Bharat Pay has Unity Small Finance Bank, and your GenWise is connected with the Axis Bank. So Axis Bank is the sponsor bank for the facilitation of transactions. Okay. So this is the idea that GenWise UPI has been launched by the GenWise company in particular consideration to the elder people in our country. Okay. So if you see some data points, that over the years UPI has become a very important part of everyday transaction, with over 400 million unique users that are using the UPI. In October alone, in the October month alone, the platform processed over 16.5 billion transactions. However, 250 million Indian elders have remained less connected to the UPI ecosystem to the transformation due to the fear of the unknown and the complex interface of other apps. So because of the complex interface as well as because of the fear of the online transactions, there are huge number of elder citizens that are not getting into the UPI ecosystem and they are not using the UPI. So now the GenWise has launched the UPI particularly for the senior citizens with easier interface with more security. Okay. So with over 65% smartphone penetration among Indian elders, the potential for UPI adoption in this segment is immense, and that the GenWise UPI wants to cater to. Okay. So GenWise UPI will enable India's elders to scan and make payments while shopping, transfer money to friends and family, and pay bills, pay utility bills, electricity bills and such, among other transactions. So GenWise UPI wants to capture the market of the senior citizens for the UPI, which is the segment that is not much talked about or not much catered to by the other apps. So this is the idea. Okay. See, it is said here that investment made by foreign portfolio investment along with its investor group shall be less than 10% of the total shares for considering the FPI. That means equal to and more than 10% will be considered in the FDI. Okay. So equal to or more than 10% will be considered as the FDI. Okay. So particularly less than 10% is written for the FPI. So equal to or more than 10% will be considered FDI. Okay. So now coming to the first question, I hope you will be easily able to answer this question. So this is the first question that you have to answer. Now before going to the second question, see, EduTap has created this website, and here we have the free material section where you can go to the blog section and you can get the information about the different examinations. So you can get the information regarding the different examinations. Okay. So you can go to the blog section, and at the end of the page here the categories are given, that if you want to have the exam information, if you want to have the job, like you want to know about the job profile and the strategy for the different components, you can know about it for the different examination. Okay, so if you go to exam information, all categories, let's say you want to know about the RBI Grade B, so the exam information is provided here, as well as you can go to the strategy section to know the different strategy for the different components, that how to prepare for the different components, as well as you can also read the success stories. So the blocks have been prepared for you so that you have the understanding of the exam if you want to know something. Okay, then there is also the courses section, that if you want to go to the courses, you can see that what is being provided in the courses, what is the price of the courses, what is the off that is going on, what all you are getting in the different courses, you can know about it. Okay, so who will be teaching and what will be taught, so everything has been provided, the knowledge has been provided to you, so that you have the idea that what all has been provided and who all will be teaching. Okay, so this is the idea. So you can go to the website if you want to know about the courses also. So now this is the first question that I hope you will be able to answer. Remember that the question is asking for the correct statements. Okay, so remember that. Now coming to the second question, try to answer this, that this is also your homework question. So now thank you very much. Do give the right answer of the homework question, and let's meet in the next session. Thank you everyone. Thank you for joining. Aditya is saying C. I don't think C is the answer, but let other students also answer in the comment section, and whatever will be the correct answer, I will comment down below. Okay. Okay, then thank you everyone. Thank you for joining. See you in the next session. Okay. So thank you all.